Hello, and welcome to our guide on how to buy and sell gold for profit. In this video, we will cover everything you need to know about buying and selling gold, including how to get started, where to buy gold, how to store gold, and trading strategies to make a profit. Gold has been used as a store of value for thousands of years and is considered a safe haven asset. Its price is less affected by short-term news and economic factors than traditional investments like the stock market. This means gold has a low correlation with a lot of those other assets, and so investors use it as a way to reduce the overall risk of your portfolio. This makes it a great way to protect and grow your wealth over time. For more information on what affects gold prices, check out our channel for a video explaining those factors. Now that we've covered the basics of why you might want to invest in gold, let's talk about how to get started. The first step is to determine how much money you want to invest in gold. You should only invest money that you can afford to lose, and it is important to keep in mind that gold prices can be volatile. Once you have determined how much money you want to invest, the next step is to choose the type of gold you want to buy. There are several options available, including gold coins, gold bars, and gold jewelry. When it comes to buying gold, there are several options available. I've included some resources in the description of this video for you to check out, but the first place to buy gold is local coin shops. They offer a wide variety of gold coins, bars, and bullion, and often have knowledgeable staff who can help you make informed buying decisions. Local coin shops may also offer competitive prices, especially if you're paying in cash. The second is online dealers, which offer the convenience of shopping from home and often have a wider selection of gold products available. They may also offer lower prices as they have lower overhead costs than brick-and-mortar stores. However, it's important to research online dealers carefully and choose a reputable one with a proven track record of customer satisfaction. The third place is gold auctions, which is a great way to buy gold at a discounted price. However, it's important to be aware of the risks involved, such as bidding wars and potentially fraudulent sellers. If you're considering buying gold at an auction, be sure to do your research on the auction house and seller and set a firm budget before bidding. The fourth is banks. Some offer gold coins and bars for sale. While buying from a bank may offer the convenience of purchasing from a trusted institution, prices may be higher than other options and selection may be limited. And lastly, buying gold from private sellers can offer the potential for lower prices, but it's important to be cautious when dealing with unknown individuals. It's important to thoroughly research the seller and the product being sold, and consider using a third-party authentication service to ensure that the gold is authentic. When choosing where to buy gold, it's important to consider factors such as price, selection, reputation, and convenience. By doing your research and choosing a reputable dealer, you can ensure that you're making a safe and informed investment in gold. Storing your gold. Once you've bought gold, it's important to consider how you'll store it safely and securely. There are several options available for storing your gold, each with its own advantages and disadvantages. Here are some of the most common options. Home storage. Storing your gold at home can offer convenience and easy access to your investment. However, it also comes with risks such as theft, fire, and natural disasters. If you choose to store gold at home, it is important to invest in a high-quality safe or storage device and to take measures to ensure that the gold is not visible to potential thieves. Bank safety deposit boxes. Many banks offer safety deposit boxes for rent, which can be a secure option for storing gold. However, it is important to note that banks typically do not insure the contents of safety deposit boxes, so it is important to purchase your own insurance policy for your gold. Professional storage facilities. Professional storage facilities, such as vaults and storage warehouses, offer high levels of security and protection for your gold. These facilities often use advanced security systems and employ trained security personnel to protect your investment. However, professional storage can be expensive, and there may be restrictions on accessing your gold. Gold IRAs. A gold IRA is a self-directed individual retirement account that allows you to invest in physical gold and other precious metals. The gold is stored by a custodian who is responsible for its safekeeping. Gold IRAs offer tax benefits and the potential for long-term growth, but they may also have fees and restrictions on accessing your gold. When choosing a storage option for your gold, it is important to consider factors such as security, accessibility, cost, and convenience. By doing your research and choosing a reputable storage option, you can ensure that your gold investment is safe and secure. It is also important to regularly monitor your investment and take measures to protect it against potential risks. Trading strategies for buying and selling gold. Now that you know how to buy and store gold, let's talk about trading strategies to make a profit. There are several gold-specific trading strategies traders use to make a profit from buying and selling gold. Here are a few examples. Technical analysis. This involves analyzing charts and market data to identify patterns and trends in gold prices. Traders who use technical analysis may look at moving averages, support and resistance levels, and other indicators to make trading decisions. Fundamental analysis. This involves analyzing economic and geopolitical events that may affect the price of gold. Traders who use fundamental analysis may pay close attention to news and events that may impact the price of gold. Buy and hold. This strategy involves buying gold and holding onto it for the long term, with the expectation that the price of gold will increase over time. Traders who use this strategy may choose to invest in physical gold, such as gold coins or bars, or in gold exchange-traded funds, ETFs. Pair trading. Pair trading involves simultaneously buying one asset and selling another asset that is highly correlated with the first asset. In the context of gold trading, an example of a pair trade could involve buying gold and simultaneously selling silver. Since gold and silver prices are typically highly correlated, this strategy seeks to profit from relative price changes between the two metals. For example, if gold prices are expected to rise faster than silver prices, the investor would buy gold and sell silver in equal amounts. The idea is that if the gold price goes up more than silver, the investor would profit from the trade. Pair trading can be a complex strategy that requires knowledge of market correlations, risk management, and quantitative analysis. Options trading. Options trading involves buying and selling contracts that give the holder the right, but not the obligation, to buy or sell an underlying asset at a predetermined price and time. In the context of gold trading, options can be used to potentially profit from price movements in the gold market while also limiting risk. For example, a trader could buy a call option on gold with a strike price of $1,500 per ounce. If the price of gold rises above $1,500 per ounce, the trader can exercise the option and buy gold at the lower strike price, then sell it at the higher market price, potentially earning a profit. Alternatively, a trader could buy a put option on gold with a strike price of $1,500 per ounce. If the price of gold falls below $1,500 per ounce, the trader can exercise the option and sell gold at the higher strike price, then buy it back at the lower market price, again potentially earning a profit. Options trading can be complex and requires a strong understanding of market dynamics, pricing models, and risk management. Both pair trading and options trading can be effective strategies for gold traders, but they come with their own risks and complexities. One of the main advantages of these strategies is that they allow traders to potentially profit from a wider range of market conditions, including both up and down markets. However, it's important to remember that trading involves risks and that investors should always conduct their own research and seek professional advice before making any investment decisions. If you want to buy physical gold and wait until the price goes up before selling it at a profit, here are the steps they might consider taking. Research. Before making any investment decisions, it's important to conduct thorough research on the gold market, including historical price trends, supply and demand factors, and geopolitical influences. This can help you to make informed decisions and minimize the risk of losses. Determine your budget. Determine how much money you can afford to invest in physical gold. This will help you to identify the amount of gold you can afford to purchase and the type of gold you can buy. Choose the type of gold to buy. There are several types of physical gold that investors can buy, including gold bars, gold coins, and gold jewelry. Each has its own pros and cons, and it's important to carefully consider the options before making a purchase. Find a reputable dealer. When buying physical gold, it's essential to choose a reputable dealer who offers high-quality products at fair prices. Research the dealer's reputation, read reviews, and check for any complaints before making a purchase. Purchase the gold. Once you've chosen the type of gold and found a reputable dealer, it's time to make the purchase. Be sure to carefully review the pricing, including any fees or commissions, and understand the delivery or storage options. Monitor the gold market. After purchasing the gold, it's important to closely monitor the gold market to identify potential price movements. Use market analysis and price charts to track the market and identify potential buying or selling opportunities. Sell the gold. Once the gold price has increased to the desired level, it's time to sell the gold. Again, it's important to choose a reputable dealer who offers fair prices and transparent pricing. Consider taxes. Depending on the location and type of transaction, there may be taxes or fees associated with buying and selling gold. Be sure to understand the tax implications and factor them into your investment decision-making process. Remember to start small, and as you see success following gold prices, you can begin buying more. Since it's impossible to time the market, this is the best way to safely take advantage of negative price swings. Lastly, hit the subscribe button to get more useful videos like this one, and check out the other videos on our channel for what affects the price of gold, as well as other useful tips